As our next guest says, the energy crisis in Europe does present an opportunity for U.S. producers to fill the void, especially for nat gas. And he's got 3 stock picks that he expects will benefit in 2023. Rob Thummel is here with me now. He's portfolio manager at energy asset management firm Tortoise. Rob, it's great to see you. Welcome.
Thanks, Kelly.
So a couple of headlines as we're sort of setting the scene for all of this. We have crude oil trading under tremendous pressure. Just went red on the session again today.
Yep.
At a time that we're talking about shortages and the desperate need for these resources in this energy crisis, why are we looking at a price chart of WTI now at $73 a barrel? It's gone negative on the year.
Yeah, no, it's interesting. So I think it's global demand, right? So the concern with China and the lockdown, it's probably going to get worse before it gets better. And what I mean by that is global demand in China is probably going to continue to decline as the Chinese economy opens up. And unfortunately, more people get COVID, kind of like it has happened all over the world. But eventually, we move past that. Then demand comes back in China. And China will drive, really, the crude oil market in 2023. Likely means higher demand. With global oil inventories very low right now and an undersupplied oil market longer term, you're probably going to see oil prices go higher as a result of that.
Were you as surprised as everybody by the fact that we saw one of the great bull markets in energy of recent times completely collapse and reverse earlier this year? And it's kind of remained moribund. What do you say to investors who say, you know what, I jumped in at exactly the wrong moment. Why should I stick with this space for 2023?
Yeah, well, that's a good question. So, nobody wanted to talk to us a couple years ago about energy. The last couple of years, because of the outstanding performance of the energy sector relative to the S&P 500, and this year is also the case, it's a good place to be and probably continues to be and for a lot of reasons. Number one, there's a lot of free cash flow, and the market is rewarding free cash flow. And so if investors are looking for earnings, free cash flow, and then ultimately dividends that are paid to investors, the energy sector is a great place to be. It'll be a great place to be for the next decade. So that's something that we're excited about.
You're sure about that? That it will, I mean, if we have to look at the Federal Reserve maybe to have an about face that can be more supportive of crude oil prices here, because the tightening right now has been a terrible headwind for crude. What are your sort of tactical stock picks? Are they oil names? Are they gas names? Where do you think people
that's a good question. So we think natural gas actually has a huge, makes a big difference going forward globally, possibly becomes a bigger story than oil in the next decade. If you look at natural gas in terms of its percentage of the global energy supply, it's risen every year for over the last couple decades, while oil's come down. Natural gas is decarbonizing. The whole world needs to decarbonize. Obviously, Europe's going to need more natural gas. China, India, all need more natural gas. Where's that going to come from? The U.S. So stocks that you can like as a result of that are, well, pick the biggest U.S. natural gas producer, EQT. If you've ever talked to Toby Rice, which I know you do a lot, he's an outstanding CEO. He gets it. He knows where things are going. Cheniere Energy, another example. Brian just talked about the need for increased LNG. Cheniere's exported roughly 70% of the LNG to Europe this year. I mean, so it's that demand for U.S. energy and natural gas in particular is probably just going to keep rising, and the U.S. energy sector is going to be needed for decades.
You also like Targa Resources, TRGP. I mean, we have obviously a key Senate election today. We have another presidential election coming in a couple of years. What about sort of the general appetite for more fossil fuels at a time when we continue to hear Europe and we see this big Inflation Reduction Act trying to push us more towards a lower fossil fuel future?
Yeah, so in big picture, we like the infrastructure names like Targa, which is a big infrastructure operator in the Permian Basin. The Permian Basin is a large oil basin in West Texas. It's the largest oil basin in the U.S. Once again, we just think you're going to need more U.S. And Canadian oil and gas around the rest of the world. That provides the rest of the world with energy security. But to do that, you're going to need a lot more infrastructure. So even if demand for fossil fuels declines, and oh, by the way, we think that demand for coal could probably decline a lot, but that will be offset by increased demand for natural gas and obviously renewables as well that play an important role longer term as well.
Yeah, infrastructure always seems to be kind of the quiet way. Gold rush, energy boom, you name it. We'll see if that works into next year. Rob, thanks again for your time today.